Now, let's get into the main topic for episode 124. We're talking about the gamification of finance, something that has recently been more and more on the radar for the SEC, but as well for all of us retail investors and consumers. It's making it easier to access, invest into, financial products like Robinhood and other, these new trading apps that are coming about. How do you think about all this, Kyle?
Yeah, it's really an interesting thought because throughout history, investments in the stock market and all these types of things tended to be something that was very serious and was not accessible to retail. And you had your broker, you had somebody, an investment advisor that was doing things on your behalf. And now more than ever, it's accessible to individuals. As you said, you can download Robinhood on your phone, commission-free trading. They even give you a free stock just by signing up. Cool. This has never happened before. And while it's done a lot of great things in pioneering and bringing down the barriers of friction towards investing in these products, we're starting to see how the retail has more power than I think anyone maybe recognized or realized that these individuals, these communities have over the market. So when we're looking at Robinhood, you're looking at high frequency trading from retail, which has caused Gary Gensler specifically to come forward, the chairman of the SEC, to say, I'm not so sure how I feel about high frequency trading from retail. And that's interesting. I think we both have opinions on that because high frequency trading isn't necessarily something that doesn't occur in the in the markets already.
It's not just exclusive to retail investors, but there is also a reason why the SEC has to pay attention to this, because NFT may have been the word of the year, but there might have been another close runner-up, which is stocks, baby. I think we all remember the GameStop saga, as well as AMC and many other of these, stocks, not tokens, that got red hot with things like Wall Street Bets, with other retail communities that were really riding on what was literally meme culture, as well as, some fundamentals behind them.
Right. Yeah. You look at social media has been a huge influence on the stock market over the last couple of years, especially with the COVID pandemic. Everybody's inside, no one's communicating in person. It's all online. You're looking at Tesla CEO Elon Musk tweeting out that he's going to take the company public, or that the stock's underpriced or overpriced, I think even at one point he said, and driving the changes in the market and kind of blurring that line between free speech and maybe some borderline market manipulation. You've got, as you mentioned, Reddit has these Wall Street Bets communities and other kind of very risk tolerant, almost gambling communities that are pumping different stocks based off of the fundamentals and the opportunities to take advantage of short sellers and things like this. Yeah. So you're seeing a ton of influence coming from the retail markets, but it does also point a light on the financial market being over leveraged in a lot of ways. And so some of these communities might argue that, hey, it's not our fault that hedge funds or other firms have put themselves into precarious positions because they felt that they were almost invincible from the retail crowd.
Oh, that's absolutely true. And of course, as a result, now, again, the SEC is paying attention. So the gamification of finance is a big trend. And of course, we are kind of talking about the potential negatives here, right, and why this is coming about. But there is, two sides to every story, and the gamification of finance proven by Robinhood and of all these trends, it is inevitable. It is the ease. There is good that comes from enabling people to actually participate in investing and potentially, gaining wealth. It's a very powerful way to do it, and gamified is actually the most fun way to do it, hence the word game. And that's why you see these new trends like play to earn, where you can potentially actually play a video game and earn real rewards that you can then turn into monetary value you can use, right? That's a big thing, as well as the fact that just in general, investing can be scary. So the idea that, okay, it makes it a little bit more friendly, a little bit more seamless, a little bit more what we're used to doing, to be able to participate in the stock market, well, like you said, Kyle, I think that's kind of a good thing, that it's not just, the ones in the suits on Wall Street that are making all the decisions. Now the crowd can also make a decision.
And it's important for companies to recognize that they no longer are just catering to investment firms, right? As a large public company now has to recognize that many of its stockholders are now making up its retail customers, and it needs to cater to them as well as catering to those large investors. And I think that the token boy, John Pittman, you saw him earlier, gave a great analogy in the office yesterday, kind of comparing it to fantasy football. And before fantasy football took over the sports world here in the States, not everybody knew a lot about football or about the players in the game and how it goes. And then all of a sudden you bring in this component of the stats and competing against one another and potentially even a little bit of gambling in there for some people that get into that with those different apps. You now have all these individuals that are experts on the stats or experts on the different players and what's going on. And in the same way, we're kind of seeing that same trend happening with investments. Now with crypto, where anybody can access these opportunities, anybody can trade 24/7, it does start to really feel like this opportunity where it's being catered towards the average investor, which is fascinating. Never before have you been able to take control of your own finances in this way, and I think that it's increasing the amount of people that are able to get involved and invested in these spaces, which hopefully creates more financial opportunity for everyone.
Yeah, it's exciting. It's absolutely, for sure, like you said, a little competitive. But I also think you said the word gambling, right? That's an interesting word because some people, they look at investing and they say, there might not be too much of a stretch between the two. But at the end of the day, there is a police, there is the SEC, there are regulations. So we have to work within this. And now for the first time ever, this concept of gamification being brought into investing is a new one for sure, and therefore the SEC has to figure out how they're going to try to address it. Gary Gensler, who is the chairman, gave us a little bit of a hint on a press conference last week on Wednesday. He said specifically that trading often, according to statistics, is bad. Probably because maybe you're more likely to make a bad decision on the run as opposed to long-term investing, which is of course cited as good, right? The fact that they have the ability to access new investment opportunities and of course gain wealth as a result.
So what do you think? Should the SEC step in here and add some additional clamps on platforms like Robinhood or others that are encouraging more of this high-frequency trading, more of this more emotional, frequent activity? Or should they take a step back and let it continue to play out? We want to hear all of your thoughts and feedback. You can leave that in the description of this episode wherever you're listening. You can tweet us on social media. You can link us in the DMs. Send us all your thoughts and opinions. We want to hear it, and we want to feature you in all of our conversations around the office.
Absolutely. We've got a very active Discord community as well. Hop in. We got token trivia every week. If you watch this show, you got a good chance of winning. So check that out. And we got big news if you haven't watched last week's episode. Spilling the NFT is now live. You can go check that out. It's great for anyone who's new to crypto. But also, again, we're looking for feedback there. And check out and give your feedback to Jessica and Megan.
Like and subscribe. Stay up to date with everything. Check out the What's Drippin' newsletter. We got all the content. And you can tune in next week for next week's episode.
Happy tokenizing.